Welcome to Lockbox Case Study number 1, hosted by yours truly, Laura Cerrone. Today's case study case study 1 is about how self-storage private money real estate investors are cashing in on today's market. I have 3 goals I'd like to achieve. First, take the myth out of self-storage real estate investing. Second, break down the numbers step by step. And third, identify 2 ways investors are cashing in. But before I can do that, there's some legal stuff our attorneys want us to cover. Okay, now back to our case study. To start with, this is an actual deal with real life numbers. But please keep in mind that every deal is different, so outcomes will vary widely. We like to run our numbers conservatively, so this case is based on our occupancy rate of 85% versus the industry standard of 90%. This case is based on a 4-year contract. The total investment for the private money investor is $250,000, and the return on investment after 4 years is 13.5%. In real estate, the key is to buy low and sell high. That's common sense, right? Which means we want to buy at up to 50% below market price. So to do this, we search for off-market self-storage facilities. Off-market meaning they haven't been posted for sale yet. This can be a tough assignment, I must say, but we have many avenues available to us to find these key deals. We send out mailers, post and engage on social media, make direct phone calls to owners, and access our wide network of industry contacts. Oh, and to dispel the myth, REITs do not own all the self-storage facilities. It is true that they are going after secondary and tertiary markets, but they make up less than 20% of ownership in America. The rest are owned by mom and pops, families. Real estate is all about the fixed up value. In self-storage, it is called value add or an equity multiplier. And unlike the stock market, where investors buy at market price, real estate is a value investor's opportunity because you can buy and create value. The idea is to take the hard asset of a self-storage facility and make it worth more than the amount you invested to acquire it. CapEx is capital expense. It is what it costs to repair, upgrade, and market the facility. These are some of the equity multipliers, which create value. These projects can vary from upgrading the security system to getting a bigger sign, whatever kind of projects are needed to improve the facility. To increase revenue, you can also raise the rents. You can upgrade or even add a retail location on site for locks, boxes, and other packing supplies. And you can add tenant insurance. CapEx is also applied to projects that reduce expenses. Simple things from switching from having a payroll to a remote management system to water efficient landscaping. Okay, we bought low and did our CapEx. Now, how long do we have to wait to make money? You do have to wait, right? No, not necessarily. Not if we bought at the right price and all that CapEx worked. These projects are designed to increase income and decrease the expenses to create higher cash flow. As the facility will continue to operate while all the CapEx projects are done, the private money investor will receive passive income, monthly, quarterly, or yearly, based on their contract. Then, at a future date, typically 3 to 5 years, the self-storage facility will be sold or refinanced. Either way, the investor gets their original investment returned. As an equity partner, the investor will also receive a percentage of the profit of the sale or the refinance. This is why private money investors look to participate in self-storage. It is low risk and can be short or long term and provides both a passive income and a capital return. Okay, so you like the deal and you want to do this too. Great. But how do you put it together? And how exactly does that work? Well, don't worry, because I'm the connector. I'm going to tell you how to put a deal like this together. First, you're going to need three things. First, you'll need to write a business plan. Then, create your buy box. And then, build your players team. The business plan and the buy box are basic things most businesses have. And then there are the players, the deal finder who finds the deal, the capital raiser who gets the money, and a connector who makes it all work. The connector knows all the players, puts the deal together, keeps the deal on track, and sees it to the end. Investing and self storage is a people to people business, a relationship business. It's that relationship that creates success. The old adage, it's who you know and then it's what you know, is not entirely true. It's more like it's who knows you, then who you know, and then you better know your business. Success in this business is based on having many good working relationships with the right kind of people to put these types of deals together, close them, and see them through to the end. That's where Soaring Action comes in. We know the players in this business, and they know us because we are the connectors. Our relationship network of contacts is wide, active, and growing. We meet and talk to investors and facility owners every day. We connect people with projects, projects with money, and money with people. That's what we do. Now, if that sounds like a relationship you would like to be part of, send us an email with your information and how we can be of assistance. In the meantime, if you would like some more information about self storage itself, head over to our website, lockbox.space, to watch some free, much shorter videos. Well, that's all I have for now. I really appreciate you spending your valuable time with me, and I hope you learned something new, something helpful, and had a little fun along the way. I'm Laura Cerrone, wishing you a profitable day.